Yeah, good afternoon. Good afternoon. I won't be staying long on the meeting. I won't be staying long. I want to go with just a short market recap for next week from price action. So I hope you guys are doing great. I hope you guys are doing great. So let's move on to the this because I have less time. So the first pair I'm going to take is Ethereum. Ethereum will be the first pair I'm going to take. So looking at Ethereum, the way I really want the price to go last week, price didn't go that way. The way I really want price to go, price didn't go that way. So looking at something there, I personally can substitute something here, which is this divergence. So we have a divergence there. So and what is divergence? Using your heliotrope analysis, divergence means whereby you have your end of a trend, so divergence occur for another trend to occur. So looking at this with 3 and with 5, there is divergence between the two. So I'm telling you that price will retrace. So there will be a retracement on price. So let me remove it now. So I just use that divergence for confirmation. So there will be a retracement from price. And according to what I have here, after the 5 will move down, so we have to calculate our retracement. And looking at our retracement, then I have it that the retracement will stop at 0.618, which is this, is 0.618, and this, but I have particularly placed my FIBO here based on price can surely come to 0.87 because it is wave B. So wave B's do have deep correction, and a bigger wave. And looking at this wave here, from here we have our W, we have our X, then we're looking for our Y, which is a complex corrective structure. That is complex corrective structure. So there is probability that for a complex corrective structure, you do have a deep correction. So an attribute of wave B also says that. So there is a probability that we have our price down to 0.768. So I personally am placing my TP here. And looking at this, let me for you to know the validation of the TP, we have our extension. If this is the price retracement, what do we have? Our extension is 1.27, and 1.27 falls under my TP. So I'm placing the TP there, and I'm waiting for price. To come to this level. I'm waiting for price to come to this level for my wave B to form. Then after the wave B, what do we have next? For the market recap, we have this is our wave A. We've stopped there. Then if the retracement wave B stop at this level, then we have our extension for wave C. Then our extension for wave C will be 1.618, and this is 1.618. We may have it as 1. These are the likely. Hello? Sorry, it's about my network. Sorry about that. So I'll be looking at this level for my correction. One level at this on the first level, which is equivalent to the distance between the A from here to here. The distance between the A will be my first TP, which I'll be looking at, and I'll be looking for a correction from that level, from here down to this, then equivalent clone, and from this level down. So this will be my TP. I'll be looking at wave C. Can you see now? I've already placed it there. I'll be looking at my wave C at this level. I'll be looking for wave C from here down to this wave C at this level before any correction to the upside, before price keep going up again to break this particular high, because prices will come to break this high. So this is what I have for the meantime, which I'll be looking at. So up to B, for B to form, because we already have a 5 wave count, 1, 2, 3, 4, 5, which A means impulse of 5 wave down. Then we have complex B, WXY, whereby you have your W, 3 wave, and this is 3, 1, 2, and 3 wave. Then we have the X as triangle, which means continuation of the B pattern. Then we have your B to the upside to form B. After B form, then we have to get our wave C. Then wave C will come down to this level, which is 971, which I'm looking at. Then wave B will come to this level before continuation to the upside, a full continuation to the upside. That is for Ethereum. So let me remove my watch list here. So that will be for Ethereum. I'm looking at next week. So the next one is EURGBP, EURUSD. EURUSD. So on EURUSD, we have our QML. We have our QML. This is the QML line. We have our QML. We have a fake out. We call this fake out zone. Our resistance are this is where they kill the retailers. People using the retailers method are being killed at this level because they think price will keep rejecting. So, but price will keep breaking any form of resistance. When a resistance forms like this, I believe price will break it and to grab all the liquidity up there. This is the liquidity area. This is the liquidity area. So I expect price to break, and which happened last week. And the reason why I'm still looking at the pair, which I have much confidence, is because of the this compression. This is a compression. Is because of the compression, and right now price already break this thing. Let's go to the higher time frame, which is the daily time frame. This is the daily time frame. Look at the daily time frame. We have our KM here. This is our KM line. This line is our KM line. This is a series of resistance whereby people keep shorting the market, and this last week they form a compression to break up this thing. Then I expect a retracement back to the resistance level. Let me show it. A break already occurred. Then I expect a retracement back to this level. A retracement back to this level. That is, I can see a little back retracement. Using your Fibonacci level, this is the top 0.23. So I expect a retracement back to this level. Then after a retracement back to this level, I expect price to move from this level. So I expect a long from the market, and place your stop. This is the previous low. The previous low, which is the higher low, the previous low. So this is the previous low. Let me just mark it at here. This particular point is the previous low. This particular point is the previous low. Then we have our market, almost 200 pips still remaining there. Almost 200 pips. Almost 200 pips still remaining there, because this is a KML level. And from this level, I expect price to drop. From this level, I expect price to drop. Sorry, let me squeeze the font so that you can see clearly. So can you see now? This is the fake out zone. This price have already break the liquidity zone. Then liquidity have been grabbed, and they are still going on to complete all the liquidity in this space. So from this level, I expect price to drop. This is the KML. This is the KML line. This is the high, and this is the low of the market. So next week, I expect price to keep the NZD. EURNZD to keep buying almost 200 pips. So add it up to your watch list for next week. So it's going to buy completely next week after a little retracement on Monday. Then after the retracement on Monday, I expect price to keep buying to the upside, whereby this place is the target. This level is the target for the EURNZD next week. So I expect little retracement again, then buy continuation. EURGBP, also to our watch list, EURGBP. So, like I said, I'm going to daily time frame to know the actual direction and what is happening on the daily time frame. So look at this place. Something happened there. There is a break of structure. This is a break of structure. BOS, a break of structure. Look at, there is a break of structure here. A break of structure, and price went up again to break the lower high. The lower high, this is the lower low, and price went up to break the lower high, forming a new trend, which means that trend is going up. It means trend have already changed and trend is going up. And liquidity here, can you see the liquidity? 1, 2, this liquidity have been grabbed. So they've already grabbed the liquidity and they pushed the price to the upside to clear off the stop loss. They came back again. I've been holding this setup for the past 1 month now. 1 month, if I'm right, been looking at the setup and it's right to take. Coming to the H4, can you see set of liquidity? This is a set of liquidity. This is the liquidity here. This is the liquidity. We have the liquidity. Can you see this is the liquidity? This is a support, and price came down to clear the stop loss. The stop loss in this area, price came down last week to clear the stop loss, which means that they've cleared all the stop loss and they are ready to move to the upside. The market makers are ready to move to the upside. This is the QML level, a demand level here. This is the demand level I've been waiting for. And according to Elliott wave, you can see that I'm combining 2 strategies at a time on this particular pair alone. I'm combining the Elliott wave and the Quasimodo together, supply and demand and Elliott wave on one particular pair for me to have a maximum assurance that yes, I know what I'm doing and I'm doing the right thing. So looking at this structure, this is your wave 1. This is your wave 1. Then after your wave 1, let me get something. Also, it's also for confirmation. It's also for confirmation. So look at this. Can you look at this? Look at this. This is it. This is it. And this is it at this level to the upside. Can you see divergence? That is divergence, which means that trend have already changed using Elliott wave. Wave 1 already formed because there is divergence between the wave 3 and the wave 5. This is the wave 3. This is the start of the wave 3. Can you see now? So this is the start of the wave 5. Sorry, this is the start of the wave 5, and even an ending diagonal. This is the ending diagonal structure using an Elliott wave. And after the ending diagonal, there will always be a new trend, and this is the new trend whereby a wave 1 formed and wave 2 formed. And confirming your bias, this is a divergence on the RIS and divergence on the main chart here. So I just use this as confirmation. So looking at the Elliott wave now, we have how many? We have a correction, a bigger wave correction, which is A, B, C, D, E, because of the accumulation and the compression. This is a compression structure and also a triangle. Using Elliott wave is a triangle and it's also a compression. So looking at the last week, they grabbed the liquidity. Yeah. So what do I expect next? So the next thing to look out for, going to your lower time frame. Going to your lower time frame, I only expect price to come down. Can you see? I expect price to come down, and from here we are buying next week. We are buying as from here. because this is the liquidity line. So I expect price to come back to the liquidity line to make a retest, which will be the final retest before price going up. So next week, so we have to get a target. The target so that we won't be trading blindly. This is the first wave. This is the end of wave one, and this is where the wave two stopped last week. So for the wave three, this will be our target for the wave three. Wave three means extension 1.618 extension of wave one. This is the wave one, and this is the wave two. So this is extension. Wave three will be the extension of wave one, 1.618 of wave one. So wave three will stop at this 1.618 of wave one. So this will be our target for next week. So we buying from this level, and your stop loss will be above the liquidity. And this demand zone, for you to have a very small stop loss, then this is your reward. Your reward is here. Your first take profit level will be the previous high, which is the wave one, the high of the wave one, the previous high. This is the first target. And this is the final target to look at. Final target to look at next week. So we're done with that. So this is what we are looking for on EURUSD next week. Only buy setup. So the next one we'll be looking at is AUDCAD. Sorry, my network is somewhat bad this afternoon. Okay, already done. My network is somewhat bad this afternoon. Sorry about that. So looking at this, I gave this setup last week. Can you see the same thing? This is the liquidity. This is our demand level. And this is our wave. I combine supply and demand and nailed wave together. So can you see now, this is the liquidity. There is a small liquidity here, and this is a Quasimodo level, KMR, a Quasimodo level, and there is a break of structure. This is the break of structure, BOX, break of structure. There is break of structure on H4. There is a break of structure on this H4, which means that trend is changing, and there is a divergence. Can you see the divergence again? RSI. I use RSI or a Wilson oscillator. A Wilson oscillator or RSI, these are the two. So looking at this, can you see the divergence? The divergence here, look at. So it means the divergence is coming down, then it's going up, which means that we are right, and there is change in trend. So after this is cleared, we have our BOS, break of structure on H4 break of structure. So we expect wave 2 to the downside, and wave 2 came down last week back to the QMR, which is 0.786 Fibonacci retracement. Can you see now? 0.786 Fibonacci retracement, and which falls on our Quasimodo level, it falls on our QMR level. So what are we looking at now? So after the retracement have been done last week, what do we expect? We expect continuation, and QMR, which will be this level, will be our first target. Our first target is the end of the wave one. This is where wave one ends before we have our wave two retracement. So we're buying for the wave three, and the entry was last week. It was a sniper entry. Can you see a sniper entry last week, which I gave free on the free channel? So the next is to get the target. The first target, like I said, this is our first target. Our first target is here, the stop of the wave one, first target. To look at this is our first target, the stop of the wave one, where wave one stopped, this level. So what our second target? To get the second target, we have according to the rules of Elliott wave rule said our extension 3 with 3 will be 0.618. So if you draft, can you see 0.618? This is 0.618. That is it. So I'm marking to Fibonacci level. To Fibonacci level, which is 1.27 or 1.618. Either of the two prices coming to this two level. So I'm looking at this two level, but particularly I'll stay with final target of 1.618, which is the Fibonacci tested level. But I'm looking at 1.27. I'm looking at it, but this is my final target. And this is the first target for you to have your first take profit level. If you enter 2 times, you close your first trade here at the end of the wave one, you move your stop loss. Can you see a very small stop loss? The risk to reward ratio is very high. We have 1:6. Can you see 1:67 is there? 1:6. So our stop loss is small, and our reward is 6 times of the stop loss, which give 1:6. So it's a very good risk to watch trade. If you enter 2 times, having a 2 trade position open on this particular pair, then you take your first take profit level at the first target, and your second take profit will be at the second target. Then after your first take profit level, you move your stop loss to your entry point to protect your second position. For you to protect your second position, you move your stop loss to this. So this will be another trade for next week. So we adding it to our watch list next week. You will AUD card. Where's the card? So I'm making this analysis on a weekly time frame. This is using an Elliott wave. Look at this. This is a wave 1, wave 2, wave 3, wave 4, wave 5. So let's confirm wave 3 if we price them in order. Can you see now 2.618 of the retracement of wave 1 price? Can you see the first price stopped at 2.17? If you look at this level, price stopped and there is a retracement 1.27 before continuation of the wave to 2.618. Wave 3, as of wave 3 have tendency to stop. Wave 3 have tendency to stop at 1.618 extension or 2.18 extension or 4.23. These are the 3 levels I watch for my wave 3 to stop. I watch these 3 levels closely: 1.618, 2.618, and 4.23. These are levels I already watch. So look at this scenario. The scenario of this wave 3 stop at 2.618. So we have our wave 4 retracement. Then we have our wave 5. And looking at the correction structure, which have been happening since 2016. This corrective structure is 2016 that have been happening since 2016. Can you see? We have this, okay, January 2016, we have our bigger wave correction, which stands for our wave 2. Then, because we've already done with the wave 1, look at, we have a regular flat. This is what we call a regular flat or a normal flat. A regular flat, whereby you have what is the structure of a regular flat? A structure of a regular flat is when you have a flat, then you have your ABC, A, B, and C for A, Then you have your A, B, and C. A, B, and C for B. Then, and for C, you have your 1, 2, 3, 4, 5 wave extension. 1, 2, 3, 4, and 5. This is the structure. This is the structure of a regular flat. This is the structure of a regular flat. Can you see the structure? ABC to the upside. This is ABC to downside. ABC to form your wave A. Look at ABC here. ABC to form your wave B. ABC for our wave B. Then our wave C is 1, 2, 3, 4, and 5, which is 1, 2, 3, 4, and 5. So this is the structure of a regular flat. I'm going to clean it up. So, which confirm my bias that I'm right. Then last week, 2 weeks ago, I posted this setup. The price is going up, and I expect personally, price, my first take profit level, because I said it that is a swing trade. That is a swing trade. So my first take profit level is, sorry, not a swing trade, a positioning trade. Is meant for this, my target. This is the first target. This is the target I'm having, and it's a position trading. You can just open it and leave it for a year or 2 years, because for the retracement to complete, it took us 4 to 5 years for the retracement to complete. So with this, I'm having that as this is a position trading, which you can take on the separate account and leave it there for years. Leave it for years for you to accumulate a bigger amount of money, because you're having almost 1,000 or 2,000. We have 2,000 pips. You might just open a 0.1 position or a 0.5 position, then leave it there, move your stop loss below this. Your stop loss will be below. Then because there will be a retracement. There will be a retracement next week. So your stop loss will be below here, very small stop loss. Then your take profit will be here. So what is the ratio? 5. Let's just say 1:5. So it's still okay. It's the good reverse ratio. So you can just leave it there for a year. So let's move to the next pair. We're having gold. Last week we keep pushing the market down. Keep pushing the market down. Last week news keep pushing the market down. Though according to the wave analysis here, which means this is where we've stopped. We've stopped because we have a complex correction. What is complex correction? Whereby we have WXY correction, and you have ABC, and ABC. ABC for W, we have our normal X, and ABC for Y. Then what is next? I expect an uptrend. Then after the uptrend, I expect a continuation to the upside. And for me to confirm my bias last week, last 2 weeks, price break this channel, which means that wave 3 is in place. So we have our wave 1, wave 2, then this is our wave 3. And I expect a wave 4, then wave 5 to the upside. If I'm right, so let's confirm if the bias is still right. This is wave 1. What do we have here? Can you see? We have our 2.61. Okay, this is it. Our 2.618 at this level, 188.4, and price stop. So if we check on daily time frame, that might be a week on a daily time frame, because price broke above the level for wave B just a bit. And let's check weekly time frame. Okay, can you see, looking at a weekly time frame, just a little pips up above the 2.18 level, and price is dropping for wave 4. Price is dropping, but according to wave 4, which still gave me concern, I expect wave 4 to reject at 0.23. It's 0.23 level, but price have already break the 0.23 level. So let's go back to H4. So price break is 0.23. Price break is 0.23. Let me just get it here. So price break is 0.23, but there is something price is not doing yet. I'm coming. There is something price is not doing yet. Price haven't get to the territory according to the Elliott wave analysis and Elliott wave principle. Price haven't got to the start of the wave one unless price break into the territory of wave one. Then this present count will be invalid, and this is the start of the wave one. So let me just clean it. So this is the start. This is where wave one's end. This is where wave one end. This is the end of wave one. This is the end. So, and price is even very close to the end of wave one. So if price break into this territory, then I believe this count has failed. But if price rejects before it enter into 1755, before price enter into 1755, if price rejects, that means wave 4 is still in place. Wave 4, and we'll be looking at wave 5, whereby I expect wave 5 price to break above this previous high, and it might get to 2000. We might see 2000, 2066. We might see 2066. But if price break, then this count is invalid. The count is invalid. And next thing to do, if this count is invalid and price break into this level, the next thing to look at is supply and demand. And looking at supply and demand, let me check the daily time frame. On the daily time frame, this is the supply and demand. This is the supply level, the demand level, sorry. This is the demand level. This is the demand level. Using supply and demand, this is the demand level. The demand level is here. I expect that this is the demand level. So I expect price again. I'll look at this level as a rejection level. But if price break above, a break below this level next week, then I expect price to keep going down and cash this liquidity, because there is a liquidity here. There is a liquidity. Can you see a double bottom liquidity? So I expect price to come down, cash the liquidity, then run up again, run to the upside again. Price to cash and grab this liquidity for those people that are holding long-term trade. So if price will just grab the liquidity. If price break below this level, I'll look into this level for price to break, then move to the upside. So either way for gold. So I'm looking, it will be on my watch list for next week. And next, so can you just say a pair you really want me to quickly give analysis? Okay, EURUSD. So next week, can you say, okay, I've already pushed it up there. So next week, I expect price to move, because this is a Quasimodo level, which I've been looking at, and this is a divergence. There is divergence at this level, there is divergence. There is divergence here, and price shoot up, and there is another divergence at this upside, which is 3D. For us to confirm it, my student got this trade. My student is like, please, Mr. Finsley, they got this trade. So this is the high, and this is the low, the higher, and the KMR level, and price dropped. And according to our KM low, so our target is supposed to be here, but we're placing the target at this level because we have another KM level, a demand and supply level. So next week, we expect a rejection, firstly, back to this level, and next target will be at this. We're looking at next week. Again, we'll be looking at this. This is the first target, and this is the second target that we'll be looking at next week. And also for German 30, So next week, I expect a retracement going to H4. This is the retracement 0.18, which I said it will happen, and price is already doing it. So what do we expect now? Let's just check. Okay, this is it. But this is our 0.618 is here. 0.618 is here. So I expect price to retrace back up. After the retracement, we've seen we be in place. We've seen we be in place after price retrace to the upside. And this will be, please mute your mic, please. Please mute your mic. So wave 4 will be at this. This is wave 4. The drop is wave 4. Wave 4. The drop is wave 4. On my wave count, the drop is wave 4, which I expect to stop there. Then after the wave 4, I'll be looking for the wave 5 to the upside. So we'll be buying again next week from this level. This will be my proposed level for next week. And my stop loss will be at this level. My stop loss will be at this 0.78. So I have a small stop loss. Then price will be going to the upside. And this will be my first target level. So thank you. Thank you. This will be the end of the class. And I will send the video to the group very soon. So thanks, everyone.